The history of credit unions. The earliest financial cooperatives date back to the beginning of the 19th century in England. A few decades later, credit unions took root in Germany. Organized by Hermann Schultz Delitzsch and Friedrich Raiffeisen, these early credit unions became the model for today's credit unions in the United States. In 1900, the credit union concept crossed the Atlantic to Quebec, Canada, where Alphonse Desjardins, a court reporter, became aware of loan sharks charging outrageous interest. In response, he organized the first credit union in North America to provide affordable credit to working-class families. Nearly a decade later, Desjardins helped organize St. Mary's Cooperative Credit Association, the first credit union in the United States. That same year, Massachusetts Bank Commissioner Pierre Jay and American businessman Edward Filene joined together to enact the Massachusetts Credit Union Act, which was the first statute for establishing credit unions in the United States. In 1920, Filene hired Roy Bergengren, a poverty lawyer, to manage the Massachusetts Credit Union Association and to promote the development of credit unions. Within a year, Massachusetts chartered 19 new credit unions. Throughout the 1920s, the U.S. credit union movement became increasingly popular. Families needed a source of inexpensive credit to purchase things like automobiles and washing machines. The popularity of credit unions grew because commercial banks and savings institutions generally were not interested in offering these types of consumer loans. Encouraged by the success of the credit union movement, Filene and Bergengren organized the Credit Union National Extension Bureau in 1921 to promote the establishment of credit unions throughout the United States. By 1925, 26 states had enacted laws to charter credit unions. By 1930, 32 states had adopted credit union laws with a total of 1,100 credit unions. These early credit unions operated under three very simple guiding principles. Only people who were credit union members should borrow money, loans would be made for prudent and productive purposes, and a person's desire to repay, their character, would be considered more important than their ability to repay, their income. They were, after all, borrowing their own money and that of their friends. In 1934, President Franklin Delano Roosevelt signed the Federal Credit Union Act into law, creating a national system to charter and supervise federal credit unions. The credit union movement grew steadily in the 1940s and 50s. By 1960, credit union membership amounted to more than 6 million members. In 1970, the Credit Union National Extension Bureau was renamed as the National Credit Union Administration, or NCUA, and became an independent federal agency. Just like the FDIC insures deposits at banks, the NCUA insures deposits at credit unions up to $250,000. The 1970s brought major changes in the products offered by financial institutions. Credit unions, too, found they needed to expand their services. In 1977, federal legislation allowed U.S. credit unions to offer new services to their members, including share certificates and mortgages. In the 1980s, credit unions gained more flexibility in membership criteria and were able to further expand the services they could offer their members. As we moved into the 21st century, credit unions in the United States continued to expand. Today, there are more than 5,700 credit unions across the country serving over 104 million members. Wright-Patt Credit Union contributes to this industry as the largest credit union in Ohio. WPCU got its start in the 1930s when it was formed by a group of federal employees at Wright Field, which is now Wright-Patt Air Force Base. There was a government employee who fell ill and was unable to work. Back then, when someone couldn't work, they didn't get paid. His coworkers pitched in 25 cents from each paycheck to help him support his family until he could come back to work. Recognizing a good idea, they decided to continue the Sunshine Fund, which was kept in a shoebox in the nurse's office, to help one another during tough times. We get our humble beginnings from people helping people, and we continue to do this today, but on a much bigger scale. We are a cooperative of people helping each other out, which is just one way credit unions are different from banks.